Everybody. Today in this session, we're going to talk about the most important thing in stock or commodities investing, and that is the three most important things. Now, everyone knows in the restaurant business, it's location, location, and location. But in the stock market thing, it's not necessarily the stocks you buy. Of course, that's important. But what's most important is these three things. The first one being timing. The second one being timing. Now, can you guess the third one? Okay, the third one is timing also. And I'm going to give you some charts and show you what I mean by timing. How you can time stocks that, let's say, belong to the real estate group. So if you want to know if the real estate group is going up or down, and that's real estate in general all across America, you can tell if it's a good time to buy or a good time to sell. Could you imagine buying real estate at the top of the market, and then the market turns the next few months later and starts going down for the next 7 years, and you're holding on to it and you bought it at the high point? Well, let me show you some charts and you'll never buy like that again. So timing is the most important thing, and the first thing I want to show you is about timing so that you never get stuck in a stock market crash. Do you see this chart that's up here right now? Right here, this chart. This chart is the 1932, let me see if I can move it up just a little bit here, the 1929 to 1932 stock market crash of the Dow Jones Industrial. This is 1929, and this is 1930, 1931, 1932. Now, if you could see this simple indicator here, here's the price going up, and the market falls down. Made a little correction up, and boy, if you didn't get out here, you sure should have got out right in this area. And, you know, I don't think back in those days they had charts like this. You could have made a chart only by putting the figures on a piece of paper by yourself. They didn't have computers and software like we have now, but nowadays there's no questions asked. You've got to follow some kind of a rule-based strategy. So let's look at this. You could have got out of the market right here. You could have either shorted the market like certain people did, like Jesse Livermore, one of the greatest all-time stock traders that has ever lived. But he shorted this market all the way down. But anyway, even here, it's still underneath this line here. Okay, right here would have been a good time to get in. Okay, so let me remove that chart. I just wanted to show you that you never ever want to be caught in a stock market drop. And this is the way to do it, by having an indicator to show you that. Okay, now let me take you to, well, I'll take you to the Dow Jones 2000. Let's see here, DGI. The Dow Jones 2007 stock market crash. Let me just increase that chart so it looks better. Okay, right about here. This is 2007 in this area right here, and about the middle of the year, the market starts to fall, right in this area. Okay, now you see the blue line cross over the red right here in this area as the market came back up, right here in this area. That was your more conservative way to get out of the market. Of course, the more aggressive way would have been when the market crossed over the red line here. But it happened here, and you would have ended up getting back in and getting back out. But the conservative way is when the blue line crossed the red, and this would have kept you out of the market till right about this area here. And then you could have got in anywhere in this area, and you could see the crossover stays, the blue stays up above the red, and the market continues on. Now, this is just a way to preserve your capital so you never get caught in a stock market crash again. Okay, now let me switch this back to SP, the S&P 500. First thing I want to mention to you is that one of the greatest stock traders ever, His name was Jesse Livermore back in the 20s and 30s. He made $100 million starting with $500. $100 million of that day's money. He ended up losing it all. He borrowed $500 from his friend, and he made another $100 million. Now, what is the greatest thing that he said? He said that it wasn't his knowledge or his thinking that made him the money. He said that it was his sitting and waiting for the market to set up at the right time. That is his greatest saying, and that's what this whole video is today, is about timing. And let me give you some ideas. Here is the S&P, and all the way from 1994, and even before that, but let's just start right here. The market's in a nice uptrend. Even though the market came back a little bit here, it's never fell below this red line, and it goes up here. And right here in 2000, in the year 2000, with all the NASDAQ stocks and all the bubbles, you could have got out and preserved your money right there, and even shorted the market or traded some puts with options, which is usually at least 10 times more percentage moves than your stock itself. But anyway, let's just say you preserved your money and you stayed out. Remember what Jesse Livermore said, the sitting is what made him the most money. So you're sitting it out, and the market crosses here, and you get back in. Alright, now you get back in, you ride this thing, all these little corrections, it doesn't matter, and all these little corrections to right about here, and you get out again. You either make money going down, or you just sit it out, and you get back in right about here, and now the market is headed up again. And every one of those times you would have preserved your capital and compounded your wins. You take your money here, you get out. You buy again here with all this money here that you made here, you buy at this point. You run it up, you get out, you've got a lot more money now on this trend. You hold off, you sit it out, and there you go. You got a lot more money and you've never lost. Okay. Those are just a few strategies I want to show you. But now I want to show you about how you can time certain stock buys. Let's say, for instance, you want, and you're looking at real estate stocks and real estate in general. You want to buy houses, and you want to know if it's a good time to buy or not. Well, don't listen to everybody else, and don't listen to all the news, because that will mislead you for sure. They will tell you to buy up here at the very top. They will tell you, all the news will come out real strong and tell you to be buying at this point, right when the market gets pulled down. And you should be able to see this for yourself. This is a chart called IYR. IYR. Okay? It's an index fund that tracks the real estate market and the real estate stocks. So anyway, you look at this here, and the market's below the blue, it's below the red, and now the blue is even below the red, the blue line. The market falls down for a couple years, and it's not until 2009 that the market gets better right here. This is the time to now start buying real estate stocks or real estate in general. And you will see that those few years the market just went down and went sideways for a while. Whereas all these years from 2002, see how 2001 the market actually went down here? That would have been a time to just sit it out. Now once it crosses here, you're ready to buy again. Okay, now this is good for all kinds of real estate stocks that belong to the real estate group. In another class I can show you some of the stocks. But let me move on from here. I just wanted to show you the timing of the real estate because it's very important. Now, let me show you, let me show you the financial group. Now look at this. Here's the market in 2003, and it leads kind of the way, follows the stock market. And right here, in about the middle of the year of 2007, the market falls, goes back up a little bit, and just heads all the way down. And I suspect that this group, this is called IYF. This is an index fund that tracks the financial group. And this I suspect this group is what pulled the whole stock market down, because this is the financial group, the banks and loans and all that, those kind of stocks. And it probably moved a little bit before the stock market fell, but it pulled the market down all the way to here. So here's your timing. If you want to know when to buy bank stocks and financial stocks, follow this. Don't be buying all the way here and here and here. Wait until the market gets to at least this point, to the aggressive point, or even farther over to here where the blue crosses the red, and then you're much more sure, you've let the trend confirm itself. Okay, so just wanted to show you a few of these stocks, how you can track certain groups. This you can also put in here, let's see, small, no, not that one. How about well, there's all kinds of things. Transportational stocks. Here's the market with good, that's leading you all the way up here to about here. And it fell when the stock market fell. Right here was, again, an aggressive way to buy, or wait until about here, which is the conservative way. But you can go look for all kinds of stocks in transportation, in the transportation group, like FedEx and UPS, those kind of stocks, and just look at that move. So this is just a little bit I wanted to show you on timing. Timing is every single thing when it comes to investing, and your money's being tied up, so you want to have the best time, but you don't want people to tell you. You don't want all the news, because they'll mislead you for sure. You want to be able to see this for yourself. And in coming up videos, I will show you how to look at the group and look at the best stocks in the best groups for real proper timing. Let me just show you one last chart, and that's the Dow Jones. This is the Dow Jones. I'm going to give you a closer view here. Here's when the market fell, right about the end of 2007. See how it was later than the financial group? The financial group fell over here in about the middle of 2007, but this came later, and then it was pulled down all the way to here. Now you can take a look here. Even at this point, when the Dow came down here, the blue line was still across the red, which tells you just to hold it. And this market ended up moving up much higher, and that's where it is right today. And this is what, May 1st? So it's in an uptrend, and it's not a time to sell. I'm not telling you it's a time to buy, because there are good times to buy, good entry points, and I can one day show you that on a different video, the proper entry points and the proper exit points. But right now I just want to show you timing is most important, and you've got to be able to see this and protect yourself against all market crashes. Never go against these things, and that's about all I'm going to tell you for today. So thank you for joining, and we'll catch you next time.